Hello everyone, we would like to introduce the Chart Guys' newest course, Essential Candlesticks and the Patterns that they create. This is something that I, 9 years into my trading journey, take for granted. I look at a chart and I can instantly, subconsciously know what the candlestick shapes are telling me, the patterns that they are creating, and the market psychology that's going on behind the scenes to create those candlestick shapes. Obviously, I had to learn this at some point, and it was literally step number 1 of my technical analysis education journey was understanding what these candlestick shapes are telling us. So after going through this 12-hour course, you'll be able to understand why candlesticks are essential for trading success, develop your own ability to observe and react to the market trends and changes, develop an understanding of market psychology and how this phenomenon influences price action, as well as a whole bunch more. I'm going to link this website in the description of this video so you can check out more information for yourself. We've got examples of the modules and we break down exactly how this course is compiled. And essentially what it is a big chunk of book learning. So it's going to break down what these patterns are telling us: 2 candlestick bullish patterns, 3 candlestick bullish patterns, 2 candlestick bearish patterns, so on and so forth. Some live examples of those patterns playing out, and then tying it all together as to how we can use understanding these patterns to benefit our trading. My partner, Chart Guys Jason, goes through the meat of this course, breaking down all these individual patterns. I personally chime in with more abstract psychological topics of discussion, the art of observation, the psychology of a candle, and things of that nature. But we look forward to you checking this course out, and we appreciate your support as always. Have a great rest of your day. Hey everyone, checking in on the markets, the S&P 500 keeping the bulls in full control and closing near the high of the day. Certainly a very low volume day today, but if there's one thing that I learned in the run after the presidential election was that volume is not needed to keep the bulls running higher. So I've disregarded a lot in my analysis for the S&P 500 specifically, the need for solid bull volume to keep running higher. So we are now breaking 271.22 resistance. We already broke it. So now we have a lack of resistance in this area until the 278s. And all these lines up here are lines from a previous chart that I have drawn from back when we were trading in this triple top. So this is our weekly triple top at 280 to 281 roughly. And you can see all these resistance lines of previous price action. So while we have a nice amount of space until we get to the upper 270s, it's certainly going to be an area to be watching going forward. I have still not entered any bearish positions, any hedge positions at this point. I am waiting until the mid 270s and above to begin slowly scaling in to hedge my parents' long-term portfolio. Again, I don't have a long-term portfolio. I'm a day trader and it's been going well, but I do want to give them some protection. So on the hourly time frame, anything above 269.88 keeps the bulls in full control with a higher low. We entered today with pretty much a double top and a double bottom with extended hours on. 269.18 was a double bottom with 269.30. And resistance 271 and 271.20, and a clear bull break after the morning trading occurred. So anything above 269.36 will be an hourly higher low to keep the SPY bulls in control. And even when we do lose the hourly uptrend on SPY, the bulls just have to hold 261.79 to keep the daily higher lows intact. So the bulls are extremely comfortable on every time frame. They're still in full control. Google had a bearish reaction to earnings, but we're through the most significant earnings season, the most significant names that the market is going to be waiting on, in my opinion. So I don't foresee any significant impact in terms of earnings causing a pullback in the market. And we'll see if we continue into tomorrow. RSI went from 20, and here we are about to approach the 70 level on the daily time frame. IWM, also a strong close. Also getting that bull follow through. Already in our lack of resistance zone. We broke that at 148.26. Bulls have enjoyed no daily resistance the last couple days. Now we're looking up at 154.13 as the next level nearby. Lots of space to work with. The most important short-term hourly support level is down at 150.32. If we break 150.32, we zoom out to the daily and we'll look for a higher low compared to 145.68 to try and keep the daily uptrend intact. Close at the high of the day, strong as well. QQQ, close at the high of the day. Daily inside bar broke bullish at 168.60. We are in an area with a lack of resistance by breaking above 167.60. Next resistance level is 171.91. Bulls enjoying the lack of resistance here. The hourly support, last higher low I'm looking down at, I'd say there's support at 168.79. And if we lose that level, we zoom out to the daily, and anything on the daily above 160.99 is a higher low. So at this point, just looking at those three names, it's going to require, unless we see some kind of huge bear volume significant event, the next time we consolidate on the daily, we're just going to look for higher lows to form. So as we've been patiently watching, we have to lose the daily uptrend in order for the bears to get any traction, and SPY just has not lost the daily uptrend at any point on this big bull move. So again, next time we consolidate on SPY, likely to hold a higher low compared to 261.79, and no sign of any trend change at this point. XLF triple top to be watching tomorrow, and the range that we were watching from the last video, 25.72 support, 26.17 resistance, triple top at that resistance, and again, we closed right on it. If we get over that level, the next resistance is up at 27.01. So again, just like everybody else, an area with a lack of resistance waiting for these bulls. Anything above 25.72 keeps the bulls in full control on the daily, and actually it's 25.71, a double bottom, a triple bottom at those levels. VIX continues the slow fade. We've closed at the low of the day 4 days in a row on VIX. So again, the weekly support that we were watching is down at 15.94, and we actually broke that. So we're now in an area with no support until 11.34. I do believe that we will see a weekly bounce before we get down to that level. But again, there is absolutely no sign of that bounce at this point. The hourly time frame just continues the downtrend. 16.73 was a lower high, 16.69, and then another lower high at the end of the day, 15.97. Bears are in complete control of the volatility index as the market continues to fade higher, and we continue to give back the entirety of the move that we saw from the month of December. Oil on the daily time frame today, played oil oversold bounce, and it was this key support that we were looking at, 53.36, and how extended we were to the downside. The hourly RSI was oversold. The 15-minute RSI was down in the teens. We saw a volume climax shaping up. Volume climaxes signal the top of an uptrend or a bottom of the downtrend very often. So I was watching this support and looking for a bottom fishing play based off that support. And as soon as it broke, I began scaling in. And that was a setup to me, in my opinion, that looked likely that we were going to see that break, try and trigger some stops, and then see the bounce get going. So I entered one of two positions. I would have entered one more if we continued to fade down to 53 psychological support, but I entered my one position on UWT down near those lows. I took profit on half that position when I had a day maker made, and then let it ride a little bit longer and locked in a solid win on the day on oil. That had the majority of my focus, but a nice 5-minute change in trend, just a V-shaped recovery, then a higher low and higher high. And we kept that 5-minute uptrend for the majority of the day. I did end up getting stopped out by a penny in the middle of this move, but again, a nice day maker or a couple day maker, so I was pleased with that. As far as where we stand on the daily time frame, pretty much an inside bar, not exactly, a little bit wider of a range, but at this point, we have support of 53.28, and anything on the daily above 51.31 keeps the higher lows intact. We are going to be looking for an hourly equilibrium into tomorrow. We have our high, low of the dump. We're going to look for a lower high to be set when the bulls tire out on this bounce, which should likely happen sooner rather than later. So we're going to look for a lower high to be set on the hourly, and then a pullback tomorrow to look for a higher low compared to 53.28. Natural gas bears keep full control. Was looking for a bounce this morning, just for a short-term oversold bounce because the 4-hour RSI was low 20s, the hourly RSI was low 20s, and the daily RSI was hitting 30, and the 15-minute RSI was low 20s. So again, I'm only comfortable with natural gas RSI levels being a reason for entering the trade when all these time frames line up. So historically, we're looking at a daily RSI bounce level. That doesn't mean we can't drop another 3% because we have definitely dipped below 30 in the past as well. But at this point, if you want to be patient, you're watching for a change in the hourly trend. Just a very clear downtrend for days and days and days. The last clear lower high is 2748. Anything under that keeps the bears in control, and supports down at 271. The bounce did end up getting a little bit of momentum this morning. We did have a higher low and higher high, but it faded, and it's a red flag when you see a bull break on the 15-minute time frame, and then that's the amount of pullback you get from that bull break, giving back almost the entirety of that follow-through. And that's when you zoom out and look for the potential of a bear flag. And on the hourly time frame, it was a weak bounce with a potential bear flag, but at this point into tomorrow, 271 is currently a double bottom to be watching. So I am keeping my eye out for the shift in momentum to lead to a short-term daily bounce, but again, being extremely picky, extremely cautious. If this bounce gets going without me, I won't really be too worried about it. But keep an eye on the 271 double bottom, and let's see if the bulls can break resistance of 2737 and 2748. So overall, the market bulls are still in full control. We do have to be cautious at these levels. Any bullish entries up at this point after 5 to 6 weeks of a bounce do not have good risk to reward, but the bulls are in full control, so those holding bullish positions have no reason to sell at this point. Watching the hourly uptrends, if they're lost, we're watching the daily uptrends, and I will begin scaling into bearish positions if we see another 1% plus of upside from where we stand at this point. Hope you had a good day. We'll see you tomorrow.